Time now for business here on Live from Paris with Stephen Carroll. Good morning.
Hello.
We're going to start off with our top news story, the Israeli elections. The economy is a massive issue.
Yeah, of course. I mean, as it always is when it comes to national elections. But it's interesting because Israel's economy was in fact more resilient than many countries during the financial crisis. And growth last year, according to the OECD, was a healthy 2.5%. That's despite the cost of the war in Gaza. Now, Israel has particularly strong technology and service sectors. That's helped to bring unemployment down steadily over recent years. It's projected to be just over 6% according to the OECD at the end of last year. It's important to point out, though, that rising tide hasn't lifted all boats in Israel. There's still 1 in 5 people living below the poverty line, and many, of course, finding housing particularly difficult.
Indeed, major issues of the election campaigns. Let's move on now with a look, though, at what's happening on the stock markets around the world.
Yes, and Europe has just opened up in the past few minutes. It's a pretty flat start on the European markets. Paris and London opening up slightly, Frankfurt down, as you can see. Shares in the British retailer Sainsbury's are up almost 2% in London. That's despite reporting falling sales. Their results not thought to be as bad as had been expected by many investors. And shares in Volkswagen, the car maker, also trading up today. Over in Asia, you can see the picture there. Generally rises following what we'd seen gains on Wall Street on Monday. Just the Hong Kong Hang Seng trading slightly down.
All right, back here in Europe then, Stephen's coined a phrase for this next story, Greco-German wrestling. We're talking about Germany's finance minister, Wolfgang Schauble, who's had some very harsh words for Greece.
Yeah, not for the first time, it has to be said, but Wolfgang Schauble told a panel in Berlin that the Greek government had destroyed the trust of its European partners in its debt talks. He said that Athens was no longer on a road out of the crisis and that he didn't know what to do with Greece now. Relations between the two countries have been strained since the anti-austerity coalition led by Alexis Tsipras took office. On Monday, Angela Merkel invited the Greek Prime Minister to visit Berlin, this as his finance minister claimed Germany was benefiting from Greece's distress.
My evaluation is, and I could be wrong, is that the banks of Frankfurt, the commercial banks of Frankfurt, are satisfied as long as the crisis with the euro continues to boil without an eruption taking place. Because this continuation of a crisis with the euro creates a tsunami of capital from the rest of the eurozone to the banks of Frankfurt, and that covers a lot of gaps for them.
Dear, none of that sounds like it's really in the spirit of European friendship, does it? Moving on to France now, some news from here. Foreign companies seem to have regained their taste for investment.
Yeah, after 3 years of falling foreign investment here in France, those figures finally picked up in 2014. That's helping to create jobs and also to save other positions that might be in trouble. Kate Moody has more.
After years of putting on the brakes, foreign investment in France is picking up speed again. This German manufacturer of tractors and other farm equipment is among the international firms spreading its French roots. It invested €6.5 million in the northwestern town of Tanger last year and hired 28 employees. It wasn't just the French charm and skilled workforce that attracted its management, but the promise of a tax credit to promote research and development.
That helps us save somewhere between 40 and 50% of what we invest in research.
After hitting a 3-decade low in 2013, foreign companies began 740 new projects in France last year, an increase of 8%. Overall, they created or saved more than 25,000 jobs. They came from all corners of the globe in all sectors, including a Dutch cosmetics and home goods chain, an Algerian household appliance giant, a Saudi investor in poultry production, and a German logistics center. American firms led the way, boosting investments by 19% last year, followed by Germany, the UK, and Italy. Emerging economies like India have so far been slow to dig in, though Chinese groups have been marking their ground. On the back of investments in carmaker Peugeot and holiday group Club Med, there are reports that a Chinese sovereign wealth fund is considering a stake in the French state's struggling nuclear giant, Areva.
All right, finally then, Stephen, I got to say happy St Patrick's Day to you.
Thank
as
you very much,
Irishman.
Catherine. You are appropriately dressed for the occasion, I see.
In your honour, of course. And we are talking about Ireland to round off the business news. It's seen a remarkable economic recovery since exiting its bailout over a year ago. But, Stephen, it seems like over in Ireland, people literally are not popping champagne corks.
Yeah, this is a really interesting one. So Ireland had the fastest growing economy in the European Union last year with growth of 4.8%. But new figures have shown that champagne, which had hit a peak in sales in 2007, hasn't recovered at the same pace. So in 2007, over 1 million bottles of champagne were imported into Ireland. That plummeted by 2/3 by 2009. But new figures for 2014 showing despite that upturn in the economy, under 400,000 bottles of champagne were shipped to Ireland last year. So while many people might be toasting indeed St Patrick's Day today or the economic recovery in Ireland, they're not doing it with champagne.
Maybe with a bit more of a traditional, darker liquid.
Or perhaps something non-alcoholic.
Yes, perhaps something non-alcoholic. Thanks very much, Stephen Carroll, and happy St Patrick's Day again.